Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that could make or break a company. Today we're diving into INVO Fertility Inc., and trust me, this filing has some interesting twists and turns that might just surprise you. Before we dive in, just a quick reminder, if you love getting the inside scoop on these corporate filings, hit that subscribe button and join our growing community. You can also find a link in the description to our Discord server where we discuss these reports in real time. So what exactly is this filing all about? Well folks, it's a Form 8K, which is basically a report of a big event that a company needs to tell the public about right away. Think of it as a company hitting a major milestone or facing a significant challenge, and they can't wait for their regular quarterly report to share. In this case, the big news revolves around a loan agreement and some really important amendments to it. The company is INVO Fertility Incorporated, or INVO. Fertility Incorporated, as it is more formally known. They are in the business of fertility treatments and services, and this report details some key financial maneuvers they have been making. Now let's look at what these securities are exactly. The company's main securities are its common stock. This is what most regular investors buy. It traded on the Nasdaq stock market LLC under the ticker symbol IVF. The most crucial part of this filing centers around something called the loan agreement. Back in September of 2023, INVO Fertility Incorporated entered into this agreement and got a loan of $1.5 million. This loan was with a company called Decathlon Alpha VLP, and it was secured by their revenue, meaning if they don't pay back the loan, Decathlon can essentially take a cut of their future earnings. Things started to get more complicated though. Over time, this loan agreement has been amended multiple times. The first amendment, which happened on the 24th of September 2024, involved Decathlon approving a separate agreement for INVO Fertility Incorporated related to something called a standard merchant cash advance. More importantly though, if INVO Fertility Incorporated did not secure at least $1 million in equity investment by the 30th of November 2024, they would have to face increased minimum interest payments starting in December of that year. This sounds like a serious warning sign, a sort of financial alert. The very next month, another amendment was made. With the second amendment, INVO Fertility Incorporated committed to paying down at least $500,000 of the loan. They also agreed to increase their monthly payments by up to $30,000 if they managed to close out a private offering of their stock, meaning they sell more shares to certain investors. And here is a really interesting part. If they fail to meet certain financial health conditions, they also promise to hire an investment banker to either find a buyer for the company or to help them raise more money through financing. This shows a clear strategy to address potential financial shortfalls. Fast forward to August of 2025 and a third amendment comes along. This one had a few parts. First, Decathlon agreed to the company's name change to INVO Fertility Incorporated. They also waived a potential problem related to a legal judgment against the company. Most significantly though, the repayment schedule was adjusted, meaning the monthly payments went up by an additional $20,000. The company also agreed to cover about $17,500 in fees and expenses for this amendment. It seems like they are constantly trying to restructure and manage this debt. And this brings us to the core of this current filing. Just a few days before this report was filed on the 22nd of September 2025, a restated third amendment was signed. Why restated? Because remember that $1 million equity investment they needed to avoid higher interest payments. Well, they did not get it by the 30th of November 2024 deadline. So this restated amendment officially puts in place the increased minimum interest multiples that were outlined as a consequence of not securing that investment. Essentially, the penalty for falling short on attracting new equity investment has been triggered and is now formalized, impacting their interest costs. This document, Exhibit 10.1, is the actual restated third amendment to their revenue loan and security agreement. This is the nitty-gritty of the deal. It shows the agreed upon terms and how they are being formally documented. And here we have the signatures. Stephen Shum, the Chief Executive Officer, has signed off on this report, dated the 26th of September 2025, signifying the company's acknowledgement and filing of these amendments. Now, looking at all these amendments to the loan agreement, it paints a picture, doesn't it? INVO Fertility Incorporated has been actively working to manage its financial obligations. The fact that they needed to amend the loan agreement so many times, especially with increased payments, and the triggering of higher interest rates, suggests they have been facing financial pressure. The quest for that $1 million equity investment highlights their need for cash infusion, possibly to fund operations or to manage existing debt. While the company is making efforts to meet its obligations through these amendments, it also indicates potential strain on their cash flow. The cost of borrowing is increasing and they are committing to larger payments. The prospect of hiring an investment banker to explore a sale of the company is a stark reminder of the risks involved and a sign that they are considering significant strategic shifts if their financial situation doesn't improve. On the positive side, the company is proactive in renegotiating terms and seeking solutions rather than ignoring problems. However, the increasing debt burden and the consequences of missed financial targets are undeniable risks for the immediate future. The company needs to find a way to increase its revenue or secure significant new funding to stabilize its financial footing. The path forward looks challenging and will likely require strong operational performance and successful capital raising efforts. Alright, that's our breakdown of INVO Fertility Incorporated's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think they can navigate these financial challenges? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. We have a fantastic community on Discord discussing these reports live, so check out the link in the description. Thanks for watching, see you next time.